Luxury real estate in Gurgaon is no longer about homes. It's about capital allocation, brand signaling, and long cycle wealth parking. I am KK Singh. Welcome to today's deep dive episode, where we decode all major luxury and ultra luxury residential launches in Gurugram in 2026. What's launched, where, who it's meant for, how fast bookings are moving, and most importantly, whether this is end user luxury or investor driven speculation in disguise. I'm going to break this episode into 4 parts. First, what changed in Gurgaon luxury post 2024? Second, project-wise launch analysis for 2026. Third, booking velocity and real demand versus hype. And fourth, who should buy and who should stay away. Let's begin. Why 2026 is different? Between 2020 and 2023, Gurgaon luxury was aspirational. Between 2024 and 2025, it became investor-led momentum. But 2026 marks a structural shift. 3 big changes define this year. Ticket sizes have crossed psychological limits. Luxury is no longer a rupees 5 to 6 crore worth of asset. In 2026, entry luxury starts at rupees 10 crore and goes to rupees 16 to 18 crore effortlessly. Inventory is deliberately restricted. Developers are launching fewer towers, fewer units, larger sizes, not because land is scarce, but because pricing discipline is strategic. Buyers are no longer homogeneous. The buyer pool is now split into end users upgrading lifestyle, NRIs hedging currency, domestic HNIs parking surplus capital, and investors betting on brand-led appreciation. With this context, let's break down the key luxury launches of 2026. First, Elan the statement in Sector 49. This represents a new category, ultra-luxury without township sprawl. The land parcel is approximately 6 acres, featuring 5 high-rise towers. Units 380 residences, with large 4 and 5 BHKs plus penthouses. Unit sizes 10.5 crore onwards. This project is positioned above the micro market. Not priced for rental yield. Not meant for fast flipping. It's meant for capital preservation with brand optics. Bookings are steady, not explosive, which is healthy at this price point. M3M Elisab branded residences in Sector 1111. Location Dwarka Expressway, SCDA zone. This is Gurgaon's first true fashion branded residence at this scale. It has 3 towers, about 330 to 350 units, ultra luxury 4 BHK, sizes from 4,000 to 700 square foot. Rupees 12 to 16 crore of price range. This project is not competing with local luxury. It competes Mumbai branded residences, Dubai mid-luxury assets, global NRI portfolios. The partnership between Elisab, a renowned Lebanese fashion brand, and M3M India aims to bring high-end, international curated luxury living to the Indian real estate market. Bookings here are EOI-driven, not walk-in sales. Demand exists, but it's selective, not mass market. In Gurgaon, all luxury is expensive, but not all luxury is safe. In 2026, Gurgaon is one of the largest luxury pipelines India has ever seen. But here's the problem. Most buyers treat all luxury projects as equal. They are not. Today, I'm going to divide Gurgaon luxury real estate into 3 very different categories. Defensive luxury, aspirational luxury, speculative luxury. If you understand this classification, you'll avoid overpaying, avoid wrong expectations, and buy for the right reason. Let's start by defining the categories. Simply. Defensive luxury is bought to protect capital without chasing appreciation, at fully mature locations having low or no land supply, low inventory, strong end user demand, and predictable resale even in slow markets. Defensive luxury is bought to protect capital without chasing appreciation, at fully mature locations having low or no land supply, low inventory, strong end user demand, and predictable resale even in slow markets. Inventory is controlled and limited, so resale pressures demand here not short-term investors, people who actually want to live there. Because of this, resale remains predictable, even when the broader market slows down. In short, defensive luxury may not feel exciting, but it feels safe, stable, and reassuring. Now let's talk about speculative luxury, a category that often looks the most glamorous, but also requires the most clarity. Speculative luxury projects are not inherently bad, but they are belief-driven rather than certainty-driven. They are typically bought with the expectation of future appreciation, not for capital protection or immediate usability. Speculative luxury is usually bought where the future is expected to be better than the present. These projects often share a few common traits, located in emerging or transitioning corridors. The value of these new luxury apartments depends on future infrastructure, ecosystem maturity, and branding. They carry premium pricing based on narrative, not current scarcity. Buyers should also note the longer possession timelines. Resale depends more on perception and timing than necessity. For example, projects like M3M Elisab Residence in Sector 111, Trump Towers Gurugram, Sector 65 and 69, Central Park Delphi in Sector 104, Whiteland Western Residences in Sector 103. These homes are bought with optimism. They perform well when timing, narrative, and sentiment align. Speculative luxury is not about safety, it's about belief. When belief aligns with reality, returns follow. When it doesn't, patience is tested. While defensive luxury projects are not exciting, they are reliable. Projects like Godrej Astra on Golf Course Road in Sector 54, since the location is quite mature. DLF The Arbor in Sector 63, a balance sheet luxury project. DLF Privana in select phases in Sector 76 and 77. Why defensive? Township depth, massive historical absorption, which is institutional grade residential. Aspirational luxury projects in 2026 means these projects look luxurious today, but their real payoff depends on time. Trehan Iris Omara in Sector 80. Why aspirational? Location emerging New Gurgaon corridor, possession around 2032. Large inventory, pricing assumes future maturity. This is a lifestyle upgrade bet. Good to buy if you are upgrading from mid-segment, plan to live long-term and believe in Sector 80's future. Next is Elan the Statement in Sector 49. Why aspirational? Sona Road SPR Transition Zone. Large trophy apartments. Premium pricing versus surroundings. This is aspiration-led luxury, not defensive. The Trillion in Sector 48 of Experian. Why aspirational? Large supply, long development horizon, value pricing relative to core Gurgaon. Works only with patience and belief in corridor growth. Central Park Delphine in Sector 104. Why aspirational? Dwarka Expressway future play. Phased delivery. Wide price dispersion. Choose selectively by tower and phase. How should a buyer decide? Ask yourself one question. If prices don't move for 3 years, will I still be comfortable? Possession around 2032. Large inventory, pricing assumes future maturity. This is a lifestyle upgrade bet. How should a buyer decide? Ask yourself one question. Defensive luxury protects wealth. Aspirational luxury tests patience. Speculative luxury tests conviction. There is no bad category. In this spree of launching luxury homes, a very pertinent question being floated around that why are there no new projects for the middle class in Gurugram anymore? And why are even ready-to-move homes becoming unaffordable? Housing prices don't start with homes, they start with land. Over the last decade, land values in Gurugram have increased sharply along all growth corridors, with the cost of license fees, FSI, EDC, IDC, and GST. For a developer today, land itself consumes 40 to 50% of project cost. Middle income pricing simply cannot absorb that base cost. So even before construction begins, housing becomes financially unviable. What many people assume is temporary inflation is actually structural. Since 2020, steel, cement, labor, and compliance costs have risen sharply. ESG, fire norms, and green building standards add cost layers. For affordable or mid-income housing, margins shrink to unsustainable levels. Any delay can wipe out profitability. Developers responded rationally. They move up the price ladder to a luxury scale. Policies intended to help the middle class often had unintended consequences. Affordable housing caps were made unrealistic without parking. Density rules that encourage vertical luxury instead of horizontal affordability. Basement and FAR interpretations that made premium projects more lucrative. Developers found luxury safer than affordability. Risk-adjusted returns favored high-ticket homes, so capital followed safety. Housing supply in Gurugram is increasingly being created for the top layers of society. A gap is formed between luxury housing and genuine middle-income housing. And when a city loses its middle-income housing base, affordability doesn't decline gradually, it breaks abruptly, so the patient of the middle-income society. Thanks for watching.